Hello, you're watching World Talks on TVP World. My name is Sascha Fahrbach. The Iran war continues to reshape global energy markets, with Saudi Aramco posting sharply higher profits in the second quarter as disruptions in the Strait of Hormuz ripple through the world economy. Diplomatic efforts to restore shipping continue. The reports by Bloomberg that European countries could eventually help clear mines in the waterway as part of a broader agreement. But energy companies warn the road to recovery could still go up to 18 months. Joining us now is Sławomir Raszewski, Senior Oil and Gas Lecturer at the University of London. Good to have you back with us. Good morning.
Good morning. Thank you for having me.
So let's look at through all this information we have. 18 months potentially it could take if all this recovers back to normal. But at the same time, let's start with these profits from Saudi Aramco, major profits there from the second quarter. But it's not only them, it's also windfall profits for Exxon, for Chevron. So explain to us why that is and why, let's say, consumers, what does that kind of message send to consumers who are paying much more at the pump?
Well, out of the sudden, we all realize that oil matters. There's been a period of time when we believe that oil no longer matters, at least, if you like, in the PR domain. But oil is very important for the global economy, and that's something that is supported by facts. If you look at how the world depends on crude oil. But obviously, it's not just the crude oil. It's also the refined products and what we pay at the pump. So from the very much layperson's point of view, we all notice that we pay more for refined products. We pay more for the petrol and diesel. And this, of course, means something. It means profit for the companies. I'm glad that you mentioned the international companies, not just Saudi Aramco, because, the business is booming, if you like. And the business is booming largely because of the geopolitical uncertainty, caused not only by the Strait of Hormuz, but also the conflict in Ukraine. And companies are indeed profiting out of it. If you look at the shortages that have been created and the volatile market, this creates conducive environment for both, supply and demand, but also for trading and indeed doubling down on oil.
Mm-hmm. But it's also been noticed, how much of this, is this just how simply energy markets work? It's a corporate profit, as you said, from different companies, also the United States. That's been noticed. In fact, I think it was just 24 hours ago that President Trump actually criticized that, ironically. He said that oil companies should give something back. He's saying that they're making too much money. Give it back to the public. So are we going to see some kind of government intervention here?
This is not, it cannot be excluded. And I think that if you look at the statement from the head of Saudi Aramco, he's been pointing out that we have experienced the greatest ever energy crisis. That's at least how it is. It's been pictured by the International Energy Agency, which very much reflects the interest or represents the interest of the consumers rather than producers. So I think there is an agreement between both the producing nations and consuming nations that indeed we have been through the biggest energy crisis ever experienced. So if we come from here, then of course the next obvious question should be, what do we do with that? How do we accommodate both the interest of the or corporate interests of companies, and at the same time the interest of the economy and economic participants on the market, including ordinary citizens. But of course, I think this will take time before this correction happens. And that's largely because oil and gas business, let's not forget, was in a very bad shape during the COVID times. We may have forgotten already about that, but, there was a time where the prices at the pumps were very low. And indeed, where appetite for investment was very much not there. So I think that we are kind of balancing now this period of time where oil and gas companies have suffered during the COVID days, and now indeed they experiencing huge profits, as you called it, windfall taxes. Well, are they going to be introduced? We're not sure, because at the moment the world needs energy, and this energy is supplied by those companies. So there is a bit of a catch-22 situation here.
Yeah, but at the same time, I think some might, what you're saying, might criticize that and say, well, I think there was never a point where oil companies did poorly or oil executives did poorly. I think the frustration here comes that we're seeing higher prices at the pump, not just in Europe, but of course in the United States as well. But yet we have record profits from this crisis. Let's also go a little bit about what we've heard from Bloomberg. This is just from their outlets just recently, last sort of day or so, that apparently Iran could allow European countries to help with demining the Strait of Hormuz. So just on the face of it, I know it's all precarious sort of data. We're not 100% sure if that will go ahead, indeed. But how does that affect the markets right now? In your mind, how does that affect pricing? And if indeed it does help to have some ships come through, will this be the relief that we were waiting for?
Well, this is a geopolitical question. Indeed, at the moment, it's not really up to the Europeans to decide. I believe that this is really much up to the United States and the agreement that is to be implemented between Iran and US over unblocking of the Strait of Hormuz. So the question is, where are we with this agreement? At the moment, if you look at the developments between Oman and Iran, there seems to be some progress there, because both countries, which, by the way, as we know, are effectively controlling the Strait of Hormuz, they've already agreed on a resolution of this crisis, which ultimately would pretty much puts Iran as a very important stakeholder in the future of oil transit via the Strait of Hormuz, including some form of, payments that Iranian or companies would be paid for the transit of oil. Obviously, this is still not agreed, and generally speaking, this is the agreement that we already have on the table, but the question is how far we are with the agreement. So once it happens, once the agreement is in place, then the mining is going to take place. Indeed, that the process of removing the mines from the Strait of Hormuz is going to take place. But I don't think that's at this stage, any cooperation between European nations and Iran is going to take place, because this is a geopolitical stake. And indeed, in this geopolitical confrontation, there are two important stakeholders, namely Iran and the United States. So I'm not sure whether this is sort of a short-term solution to the problem. This is something that probably is going to take place, maybe very soon, but not yet. And probably this will ultimately have effects on the prices, for sure.
And also what's critical, especially for Europe, as we're kind of leaning a little bit now into late summer, into autumn, what's always on the horizon is the winter and is LNG. So, massive amount of that comes from suppliers from the Gulf. That's still currently not happening. A lot of the refining was damaged. Right now, the storage levels in Europe are not what they were last year. I've asked you this before, not that long ago. I'm just wondering, in terms of your assessment now, how exposed do you think, if this doesn't get resolved anytime soon, how exposed is Europe? How much are we exposed here in Central and Eastern Europe? And Poland has done a lot in terms of their LNG network. Are they better off, let's say, than others in Europe?
First of all, the storage is not there where it should be at the moment. If you compare with the previous years, the stored natural gas is not there yet. The second thing is that if you look at the desperation, if you like, on parts of the European countries, European importers of LNG, including increased imports of LNG from Russia, or indeed disagreeing on banning or implementing yet another series of sanctions on Russian LNG. This proves that Europeans are very desperate, and they very much want to secure flows of LNG, no matter where it comes from, including from Russia. And the third one is also talks with countries that historically were not really there on the radar when it comes to supplies from Algeria, but also, pipelines that are being built now. If you look at the pipelines across the African continent to deliver gas from West Africa to Europe. So we already have some very, I would call it, desperate moves, because the situation is very uncertain. We don't know where Qatar is going to be, and as you rightly pointed, even if the situation restored, but this is a big if, because we just said that earlier on. This requires a geopolitical reassessment between US and Iran. Even if this big if is resolved, then the question is how soon Qatar is going to rebuild its capacity to be able to start exporting. And then the second thing is, what the volumes are going to be. I mean, we have too many big ifs, and that's why in Europe there is a greater sort of, if you like, understanding, I think, of the situation, and that this may explain why those desperate moves are being taken, why LNG is still beyond the sanctions, because of the security of supply.
But one interesting development as well is, one of the things, probably because of the profits, this goes back to Saudi Arabia, is that they've been able to transport a lot of their oil on that east-west pipeline, right? So essentially not using the Persian Gulf anymore, but then actually using the Red Sea there. Still a bit dangerous with the Houthi rebels, but at the same time, what kind of capacity does that have? Can they scale that up? How quickly? Could that also potentially be for LNG as well? All that takes time, but that other corridor, is that something that could maybe alleviate these problems?
Absolutely. It's been a lifeline for Saudi Arabia, and that's why Saudi Arabia is relatively stable when it comes to supplies of oil, thanks to export to the Red Sea to Yanbu terminal, and later on through Bab el-Mandeb to the Asian markets and European markets. But as you pointed, this is not the full capacity. We are down to anything between 1.5 to 2.1 million barrels of oil per day. So it means that the capacity is much greater. Obviously, this lacking capacity also may explain why the profits have been surging. So in other words, there is a volatility on the market which creates, if you like, greater demand for oil. So yes, this east-west pipeline has been instrumental, but at the same time, there is also some uncertainty. And if we follow the news recently, we know that deterioration of the talks between US and Iran may lead to more attacks on shipping through Bab el-Mandeb. So what it means is that we have a lot of uncertainty. That's why, coming back to your point, I think you made a good point early on about the need to demine the Strait of Hormuz, and indeed we are probably heading that direction, and probably this will require good faith on the side of both Iran and US to come to an agreement and finish this conflict. But of course, this doesn't solve the problem still altogether, but still solves the biggest all problems. Obviously, we still have the crisis in Eastern Europe. We have war in Ukraine, and we also have, other problems to solve. There's a lot of problems to solve, but all these problems have definitely led to, if you like, improving conditions for oil globally.
All right, so windfall profits for the oil companies, but still recovery, still not certain. That will take some time. But look, thanks for giving us the latest insights there. Always a pleasure having you with us. Sławomir Raszewski, thank you so much.
Thank you.
And thank you for watching World Talks, but do stay right here on TVP World for more news and commentary. Goodbye.